Alright guys, we are back with another gold and silver video. I know I mostly do car stuff on this channel, but I need a creative outlet for this stuff. If you've been following along, which there's probably a grand total of like 10 of you following along my precious metal stuff, I've been covering this stuff since 2021, way back when the chart was back here. If you've been following along or have any sort of faith in the precious metal system, you would know that this structure in gold and silver has been a long time coming. So if we just take a look at gold is pretty much making these little continuation squeezes every couple months or so. So we had one here, we had another short one here. This will probably squeeze some up like this and just keep on trucking. What's happening here and here is the market's kind of consolidating the gains and then building a launch pad for another move. So I expect to see something like that and just, continuation onward and forward and keep going, because precious metal bull markets typically last a long time. If we zoom out and we kind of take a greater look, a larger look at the whole, gold chart, you can see that in general the whole thing was squeezing upwards pretty much since the gold standard was dropped. I don't expect to see this change anytime soon. I would expect us to just keep going up. I mean, they keep printing money. No one has any faith in fiat currencies. I think this chart will continue to do something like this. As long as they can't figure out some way to make gold in the laboratory out of, copper or something like that. So far, they have done that, but it's prohibitively expensive. It would cost way more to do that. So let's just take a look here at some charts. Right here, we got the NASDAQ divided by the price of gold. Now, one important thing I've always pointed out is the relative high of tech stocks when you price it in ounces of gold happened way back here in the dot-com bubble. Since then, we have moved up to a similar level of overly inflated tech stocks that we were experiencing back in 99 and 2000 here and here, and we've started to make our journey downwards. Now, I made this chart, this structure, literally I probably drew this 2 years ago at this point. So it's really clear to me we have a head and shoulders of tech stocks when you price it in gold. So the point being is there are going to be tech stocks that go up in terms of dollars, but the overall market is now in a bearish trend against the price of gold and silver, if that makes sense. So you've got your left shoulder here, that's your head, and here's your right shoulder. I kind of drew this sort of highlighted area to show what we're probably going to play around in and expect. As you can see, let's get rid of some of this so you can kind of see more. Here's your shoulder. We're kind of in the armpit area right now, kind of testing this support level of about 6-1. So NDQ divided by gold is a ratio of about 6-1 right now. So this is a major support and resistance area. You can see it's acted as resistance and support many times. Now we're actually trading below it right now. I would expect to see this white trend line continue, and I can actually kind of adjust this downwards more. If we move this guy, kind of expect to probably see something more like this. We had our retest, we had a pump, and now we're going to keep dumping. Now once we hit the 5, so we're at about 5.8 now. Once we hit the 5 down here, the 5.1, the 5.2, we got a long way we could go, folks. Just think about it. Last time we were in a precious metals bull market, the NASDAQ hit record highs, record bubble. In relation to gold, the NASDAQ went down. Here, let's move this so we can see it. In relation to gold, the NASDAQ went down roughly 93%. Okay? From here to here was a 93% devaluation against the price of gold. We went from a ratio of 15-1 down to almost 1-1 with the price of gold. Now, this line down here, the 1-1, has been resistance and support many times. There's no reason that it can't come down further. If you think about where we're at now, we've only gone down 33%. To give you an idea, another 90% would take it 92, 93, another 90% would take it even lower than the dot-com correction. So if you think about it, here's the dot-com bubble. Around here was the housing market crisis and the eventual bottom. And then the overvaluation of tech equities against gold and silver, and now we are in a correction phase once again. So it's hard to say. Obviously, I've got some support lines drawn right here. This will probably be a support line. We can also kind of estimate another area of support and resistance would be here, and a potential another would be right here. You know, and it's always funny to me that these coincide with like pretty round numbers. So if we move that one up, yeah, we've got another support resistance zone at the 5.0. This one, if we make the line straight, is at about, let's get this straight. This one's at about the 3, the 3.1, the 3.5. We could kind of put it in here about the 3, 3.5, 3.7 area. So the thing I want to stress here is we have seen equities drop 93% relatively to gold before. Right now, we've only gone down about 30%. In my mind, there's still plenty of room for them to correct. Now, keep in mind that doesn't mean every single stock in the NASDAQ is going to crash. That's just saying the general broader market is probably going to lose market share to gold, at least in the tech sector. Now we can take a look at the NYA, New York NYSE divided by gold, and we have a very, very similar thing happening. You can see our ultimate top out against gold was back in the dot-com era. Then we experienced, over the period of about 10 years, 12 years, 11 years, around that, we experienced an 86% drop in the relative valuation. Now here, I've got the left shoulder, the head, and the right shoulder to kind of show you in this trend line showing where we were bumping into resistance. We're now sitting at the 5.0 as well. It's, you know, once we break through the 5.0 on this and on this, you know, it's going to be another steep drop after that, in my opinion. I mean, let's zoom out here and look at the wider context. There's not a lot of support and resistance in these areas. I mean, we can draw one here, we can draw one here. But, you know, if we take this 87% and say we do something similar, you know, we could be looking at something down here. What does that mean for the price of gold? Well, I don't think $10,000 is out of the realm of possibility within the next decade. I mean, I think that'll probably happen maybe even within just like 5 years if it gets really bad. And if there's a true economic crisis, which I believe we might be in the midst of one right now, I don't think 10,000 is out of question. I don't really think 15 or 20 is out of question too. If you were to just take its inflation adjusted value and price it in, you know, old dollars, so let's say, you know, $4,300 now. Well, if you were to price gold in dollars from, you know, 1980, I'm sure it would already be at $10,000. You know what I mean? So there's the paper price, and then, you know, there's what it really should be worth. Another interesting chart is if we look at Bitcoin divided by gold, you can see Bitcoin hasn't made a new relative high against gold for about a year now, and we've had a lot of losing months here, you know, due to the rally in gold. You can also kind of see here Bitcoin's sort of logarithmic nature, or its exponential nature. You know, I would expect to see continuing diminishing returns like this. You know, maybe the chart looks something like this and you bump up a little more in there. But to me, Bitcoin is trading more like a tech equity. It's trading more like something in the NASDAQ. So if we add this to compare, let's, oh crap, how do we do this again? Add to, oh shoot. Sorry guys, give me a second here. I'm trying to figure out how to add this to compare. Add to compare. So if we take the NASDAQ divided by gold and we compare it to Bitcoin divided by gold, and we need to reset the scales, and we need to express this. Oops, don't want to do that. Bear with me one second here, guys. Let me move this to a different pane above. Now let's take this and make it, why won't it let me change this to logarithmic? Anyways, let's see if I can just make a visual representation of what we're dealing with here. Yeah, no, it's not cooperating with me. Okay, this kind of shows what I wanted to see. Oh my gosh. Okay, logarithmic, there we go. Okay. Okay, thanks for sitting through the technical difficulties. Okay, you can see here we have the NASDAQ divided by gold, and then we have Bitcoin divided by gold. You can see some major inflection points, some major similar trends here and here if we kind of just draw lines with the local highs and local lows. We had a local high here back in 2021. We had another local high here about a year ago, and then another local high here. Everyone at the beginning was always comparing Bitcoin to digital gold. If Bitcoin is digital gold, why is it trading like a tech stock? Answer me that, Michael Saylor. So yeah, to me, Bitcoin is more like trading in shares of Facebook something, or Nvidia or something like that. It's not digital gold. There is scarcity. There is digital scarcity, but it's not really quite behaving like gold. If Bitcoin was behaving like gold, this chart here would be either 1-to-1 with a gold chart, or you would be seeing it outperform gold and just go straight up. What we're kind of more seeing here is, yes, there was this, logarithmic nature, or exponential nature of the production of Bitcoin, but you can see along with the tech stocks, this is kind of flattening out. We had this peak and we're kind of flattening. Same thing with Bitcoin here, where we kind of had a peak and now we're flattening a little. I don't know if it'll stay that way forever, but to me, these charts look really similar. To me, Bitcoin is just trading like a tech stock. So I think I've made my point there. Let's take a look at the gold to silver ratio, because this chart is looking crazy. So let's get rid of this. And back here, I had called this from my personal trades, but we hit a relative high back here in May, April, June, and I ended up buying a ton of silver. Because why is the gold to silver ratio over 100? That almost never happens. That's happened 1, 2, 3 times, 4 times in all of recorded history that we have the gold to silver ratio going back about 100 years. So typically when you see those, you see a correction down to the mean. You see like a mean reversion. So we have here, it goes down here. We're already right back down here. I would expect to see the gold to silver ratio be more at probably 44 or 30 range pretty soon. If the bull market continues for precious metals, you could see it hit as low as 15, which it's done a couple times. What this means is gold is going to keep going up. Silver, dollar for dollar, is going to go up quicker, and we've already seen that. So moving on to silver, we can see here that we broke out we broke out of the cup and handle very recently, actually. So let's look here. If we just go to the daily, we really officially broke out of this cup and handle, October, November of this year. So relatively recently. So people are seeing $65 silver now and they're going, oh shit, wow, that's crazy. Well, the precedent has been set for literally like 50 years, guys. This cup and handle right here, this one, this chart formation is literally like 50, 40 years old. So, the way to measure the technical aspects of a cup and handle is to put a line and measure the depth of the cup and then put it on top of the handle. Now, that gives us a target for silver at around $600. Yeah, probably $500 to $600. Now, that could be a spike and then it can revert back. But think about it. Silver, in just the past couple weeks, has already gone up 30%. We've seen the gold to silver ratio drop down even more dramatically. If the gold to silver ratio keeps going down and visiting these levels, all while gold continues its march to probably 10,000 up here, by design, that means silver is easily going to start hitting some ridiculous numbers that people probably would never expect. And that's going to be the thing. Once it hits probably about $100, $75, people are going to freak out. If you haven't already, people really should be. I mean, this is unprecedented. Silver is hitting new all-time highs. It's never really been above $50. You can look up all sorts of things on Kitco where the refineries are super backed up and the liquidity is all junked up. Anyways, all suffice to say, yeah, silver's target is way up here, guys. I mean, it is really way up here. And honestly, silver has been suppressed in price for so long. It's about time that this happened. It sounds crazy now, but even at $65, we could still see another 10x from here, which is just insane to say. But, I don't think it's really out of the question. Once silver hits like $7,500, people are going to realize like, oh crap, oh crap, it's going to become unobtainium, and then it's going to shoot way up because everyone will start piling in. So if we look at the S&P divided by silver, we see a similar thing as we did with gold. You got this kind of head and shoulders situation here, and then we've just fallen off a cliff. Stocks have just fallen off a cliff compared to silver and gold in the last couple weeks and months. Here's kind of the inverse of that chart and something that I've drawn. Here's silver divided by the M2 money supply. You can see that broke out and shot up. Pretty much every chart is confirming what, if you've been in the precious metals space, we've known for a long time. Like here's the breakout against the dollar. You know, we've known this is going to be happening a very long time. So just going through some other charts here, seeing if I want to point out anything. You know, it's pretty clear to me that we're going to experience a reversal, and we're going to get one of these for the next probably 10 years. Let's look at Tesla divided by silver. That's pretty interesting. So here we've got, first this, we've got some sort of squeeze happening right here. And whether it squeezes higher or lower is up to debate, you know. We could see something like this, and you gain momentum and keep going, or something like this where you start visiting legacy levels. Now, like I said, you know, the broader NASDAQ is probably going to go down compared to gold and silver. But maybe Tesla or Amazon or Apple is going to overperform. Maybe not. You know, here we have Google divided by silver, we have Apple divided by silver, Amazon, and Tesla. Just anecdotally, it looks like Tesla's doing the best out of all of them. But you can see it's very similar to this NASDAQ chart. You know, we kind of had a top here back in February 2024, and since then, you've either made no ground or you've gone down a little. There's Meta. Meta's done a little better. Okay, so here's the Russell divided by silver. You can see, you know, it's probably just going to make something similar. Go right back down here. I don't see why it would. Here's one I should have bought more of. Wheaton Precious Metals. It experienced the same cup and handle as the precious metals, but this is an actual stock. There's an equity. So this is what I mean. There's going to be some stocks that benefit from this and do well regardless of what the precious metals are doing. But then there's going to be some, like the stinkers on the Russell, that are just going to lose out market share to gold and silver. Maybe not necessarily market share, but in relative terms, you know. You can see Wheaton Precious Metals has been outperforming the SPY pretty consistently. We're going to run into some resistance up here. So to me, this tells me the metals are probably going to take a brief pause, and this might be a good time to buy. You'll probably see something like this, and then it go up and start going up even more. But let's see what else I got here. Wheaton Precious Metals divided by gold. Yeah, you see this? This is pretty interesting. We got another cup and handle right here. So when this breaches, you know, it's going way up there. So Wheaton Precious Metals, that would be a pick for me. You can see against silver, it pretty much continuously goes up since they literally produce gold and silver. Gold is a little bit different, but we can see here that a cup and handle is forming, and this is probably going to take off. So yeah, Wheaton Precious Metals, it's already way up. It's already doubled in about a year now. But I don't think it's unreasonable to see it double again. Here's Fortuna Silver Mines. Oh, wow. Hitting all-time highs. We're obviously going to get some resistance here and a little bit of a pullback, but this is one I probably should have stayed in. You can see this one is not as good as just buying silver outright, but it could be a good play if you're not interested in buying physical. You can just see in every single currency, silver's making new all-time highs, and it's just completely left the chat recently. So that's about it, guys. Yeah, buy gold and silver. Stay safe.